Hey guys, so today is Thursday and I'm going to make a quick trade breakdown. So let's start on the daily chart. So right here you can see we are definitely at all-time highs once again. Still difficult price action, still stuck in this range or basically high resistance on the daily chart. So basically important levels are actually they are on the lower time frame. So dropping to the 50-minute chart. But here we can see we definitely were really bullish yesterday, and since then we actually just had a retracement. So as you can see right here, we have London highs, which got swept on ES but not on NQ. So we have a huge high time from S&T, as well with New York Open Kill Zone highs. So they got swept as well. So S&T right here as well. We have New York Open Kill Zone lows, London lows right here, both swept, and all opening prices stacked up right here together, and also a new higher time frame gap. And this week is actually the huge for our order block right here. And right here we have the upper quadrant of it, consequent encroachment, and the lower quadrant. And right here we have, like on the 1 minute chart, you can see it. We have the opening range, so the high from 9:30 and 10 a.m. So the low since, or the low and the high which formed since 9:30 until 10 a.m. And yeah, as you can see right here, we definitely had a difficult AM session. We really traded back and forth, and then we eventually sold off. So we do have a inversion fill gap. We accumulated, we had definitely time distortion in here. Then we were able to just basically trade lower. And on the 15-minute chart, you can see that we are in a market maker sell model, because we swapped basically buy side liquidity with the SMT. So therefore a market maker sell model is in play, and we target just low resistance liquidity right here, and aiming for the upper quadrant of the 4-hour order block. And we still have also like the inefficiency right here, so that's definitely a busy, which would also be like a important target, and also like consequent encroachment. But because we sold off right here and ripped higher right here, so that's basically a down close candle right here, followed by a only up candles right here. So therefore this level is actually a balanced price range, what I realized later. But let me show you it on the 15-minute chart as well. So right here, put it to the back. So that's definitely a balanced price range, and as you can see right here, we traded into it and then traded higher. So now back to the 1 minute chart. So basically now also, or maybe let's talk about first NQ and regular trading hours. So S&P or ES was actually we had like the a huge S&T, but since then we actually were aligned with NQ, so nothing really special, and so pretty similar to NQ. And right here we have regular trading hours, and I think we have our new opening range gap right here. So it's really small, 5 handles, so we just ignored. Nothing really special in here. Also like still have a previous regular trading hour new opening gap, which actually gets respected right here. Or we definitely trade around consequent encroachment. I don't know how long I want to keep them, but as long as I see price react to such levels or these opening gaps, I still keep them on my chart, because they are only on regular trading hours, and it's just not too messy because I'm still well, because I'm on a different chart, because I trade futures, because you have to pay to oh no, I trade actually how do you call it, not futures but CFDs, I think. So I trade NQ100 and USD, so CFDs because you have to pay for futures, genau. So now back to NQ. So let's talk about the execution. So today was a break-even day for me. So what was my thinking process? So basically we definitely reacted of consequent encroachment of the upper quadrant right here, and traded high with the London close macro, sweeping trade stops right here. And then we basically had the short-term run-on stops. We had also like traded back into the lower quadrant of the opening range, and then we dropped lower below the inversion fair value gap, and then I knew, okay, we would eventually trade lower. I definitely wanted to see the busy right here fail, so that the fair value gap doesn't support price higher. I didn't want to see support right here. I was looking definitely for the buy side, for the sell side liquidity, but that wasn't a target to me, because we actually stopped right in advance of the high time frame gap. I wanted to see this low basically get swept, and also like trade back to consequent encroachment. But eventually I got stopped right here, so nothing really special actually. I think it is a valid trade. It's not a quality trade, I have to admit, because we are actually already relatively overextended. It's still, to me, it's not chasing price, because we are within a market maker sell model, because we have the huge high time frame SMT, and we still had not reached any significant sell side liquidity. So as you can see right here, we definitely swept sell side liquidity, but we still have like room to go lower. But what I missed out definitely was the balanced price range right here. So I was like only looking at it right like this. So I was looking for the busies right here. So to me, this is like low resistance price delivery paired with displacement. So therefore, I actually expected price to just fill these inefficiencies and basically drop even lower, maybe back to the higher time frame gaps right here, or at least to consequent encroachment of the 4-hour order block. But because we have a balanced price range with the basically sell off right here, and then with ripping higher, so we have a down close candle right here followed by a instant candles to the upside. So therefore this region of price is balanced, and therefore it was kind of not ideal to expect that we would expand lower, because the balanced price range is definitely delivering a really strong support. So nothing really special. I got stopped. We eventually actually traded to our first partial, so the higher time frame gap, later on with the lunch macro. But as you can see right here, it's definitely also like high resistance, nothing really clean in here. We don't want to sit through such conditions. So therefore, I'm content with the trade I took, and also like how I managed the risk. So that's basically it. See you soon, and